Thanks for watching today's video. I'm Brian, the Finance Ninja. In today's video, we're talking about Tesla's FSD subscription plan and what exactly does it mean for Tesla's stock price. Now, as you may have noticed in my thumbnail, yes, I'm calling for a 20x to a 30x in Tesla stock. Now, yeah, I know what you're thinking. For a $600 billion company, this is quite the ask. However, in my opinion, this is not only possible, but it is becoming increasingly probable. Now, I may be crazy, these may be the ramblings of a madman, but all I ask is that you hear me out, check out my models, and let me know what you think. Don't forget to like and subscribe. Remember, I'm not a financial advisor, I'm not your financial advisor, so please do your own research and let's start your engines. So, how's Tesla doing? As of the snapshot, Tesla is at $644.22. Market cap, $621 billion. For transparency reasons, here's my position in Tesla. This is my main account. I have a few smaller accounts that also have Tesla stock, but this is my biggest position. Cost basis, $239,000. A return of 121%. Market value, $529,000. Keep in mind that I started buying Tesla when it was a $30 billion market cap. I bought more as the price went up. That's why my average price is so high. As I'm sure you've heard, Tesla is offering customers to pay a monthly fee instead of the upfront $10,000 fee. Over time, I expect the upfront fee to go away completely, opting for all new customers for the monthly plan. You'll see in my model why I think it will go away. Here's the key point. Tesla can increase the price of the monthly plan at any time. This is why I think the upfront fee will disappear. New or old users will pay the new fee. There's no grandfather clause. This means that as Tesla adds new features and FSD gets better and better, hopefully reaching level 5, they can charge all customers the proper price for the features they will get. As CFO Zachary Kirkhorn stated in their Q1 earnings call, he expects as the portfolio of subscription customers builds up, then that becomes a pretty strong business for us over time. Yep, he's not kidding. Onto my models. Here's my estimates for Tesla's vehicle production and deliveries over the next 10 years. These numbers will be important when we calculate the FSD subscriptions. Trust me. In 2021, this year, I expect sales just shy of 1 million units. It would be a million, but the plan got delayed and just recently came out. Berlin and Austin should come online this year, wrapping up in 2022, where I expect sales of nearly 1.6 million vehicles total. Stretching out to 2031, where I expect sales of 22.5 million vehicles. By 2031, I expect there to be 120 million Tesla cars on the road. This is my base case for vehicle sales, and it is very safe in my opinion. I brought over the cars on road from the previous spreadsheet. See? Told you it was important. Prior to 2021, there were about 1 million Teslas on the road. So a brief on these numbers. All the numbers in this chart are self-explanatory, so brief explanation complete. In 2021, I expect the percent of Tesla owners opting for the monthly subscription to be 25% at $200 per month. The percent can go up and down. Honestly, this year doesn't matter too much in these models, as you will see. This gives us nearly $1.2 billion in revenue. I'm assuming that FSD reaches level 5 by the year 2025. So, as a result, the monthly price increases and continues to increase as it gets better and better. The amount of people opting to pay the sub also increases as people get more used to self-driving vehicles and how safe they are. This grows into 2031, where 70% of people are on the subscription plan, paying $400 per month. This equates to a yearly revenue of $404 billion per year. Yes, you heard me right. Around 2031 is where I expect people to see a car where a person is driving and actually think to themselves, really? You're driving yourself? Self-driving Teslas should be second nature by then. Even then, I still put it at 70% when it can actually be higher, in my opinion. For the valuation, let's first find a comparison. There's none really to look at in this space, so let's look at Microsoft. Microsoft sells both software, hardware, and infrastructure, so they're a very large conglomerate, which Tesla will also become. Microsoft has a price per sales ratio of 13.4 right now. For Tesla's model, I'll assume a price per sales ratio of 13, slightly lower than Microsoft's current ratio. So what does this give us in terms of share price? I'm going to be using the multiple valuation model. So in 2031, revenue of $404 billion. As mentioned, I chose a PS of 13. That gives us a market cap of $5.25 trillion. Yes, the biggest company in the world. A share price of $5,453. This equates to an upside of 747%, or about 8.5 times. But wait, didn't I promise you a 20 to 30x? 8.5 is not 20 to 30. Well, the 8.5 is for FSD only. It does not include Robotaxi, auto, energy, or anything else. But lucky for us, I've crunched the numbers on a Robotaxi valuation. I've gone over these numbers before. The link to the video is in the description, so I'll give an abbreviated version. I'll go quick, so try to keep up. First, my assumption is Tesla owns these vehicles outright. Why split the check? Am I right? If Tesla can get the price below 60 or 70 cents per mile, I predict people will gradually begin to eschew owning a vehicle to taking Tesla's Robotaxi service everywhere. Will this happen? It's hard to say right now, but I think many people will, especially in cities. I'm giving the bold case for Tesla Robotaxi with this big transition. Number time, car count of 20 million, miles per year of 50,000. Utilization is the amount of miles driven that is charged. I put it at 50%, which I believe is small, as Tesla will have an efficient pathing system, so their cars spend more time driving people than driving empty. Price per mile includes the possibility of multiple passengers in the car at the same time. So this number may seem high, but when you take into account multiple passengers, it is not. Billable miles, thus, is 25,000. Price per mile, 70 cents. Other revenue of $18.5 billion. So total revenue is $369 billion. Cost per mile of 8.4 cents. That makes for a cost of revenues of $84 billion. Also, that is a gross profit of $285 billion. Depreciation of $30 billion. Insurance, etc., $42 billion, SG&A, $10 billion, R&D, $1 billion, operating expenses, $83 billion, operating income, $202 billion, taxes of $26 billion, for a net income of $176 billion. If you assume a PE of 60, that gives you a market cap of $10.5 trillion for Robotaxi only. Yes, biggest company in the world. Share count 963,000. That gives you a share price of nearly $11,000 per share for Robotaxi only. But wait, now we have a problem. Where do these 20 million cars come from? What we have to do is we have to divert cars from selling them to customers to keeping them internal at Tesla. Remember, this Robotaxi network, for my model, is for Tesla's internal use only. These are not customers driving the cars. Or these are not customers owning the cars. This means we need to modify our FSD model. Here's the updated chart with 20 million cars taken out for Robotaxi. You can see them start coming out in 2025, culminating in 20 million cars diverted by 2031. Remember, I expect the Robotaxi network to come online in 2025, hence the small rollout then. You can see the effect on profits. 2031 revenue declines to $331 billion, but what does that do to the valuation? The share price contribution from FSD alone is now $4,545 per share. A little bit of a chop, wouldn't you say? This will bounce in 2032 since Robotaxi shouldn't need much more than 20 million vehicles in my opinion, but let's go with this number. Let's be a little bit conservative here. Let's add Robotaxi's share price contribution of $10,953 per share. Add them both together and we get $15,498 per share. Just for FSD and Robotaxi. This does not include auto sales, energy, or anything else. I will model those later. But even without those, we're looking at a 2,300% upside or a 24x gain. Whew! And I think this model is reasonable. It's a bull case for sure, but it doesn't even include auto or energy. So it's not as much of a bull case as you may think. As you can see, Tesla should be valued like a tech stock, not a traditional automaker. These numbers are software numbers, more specifically, software as a service, or SaaS. The analysts covering Tesla should be tech industry analysts. People who actually understand this stuff, not auto industry analysts who understand nothing of technology. People like Gordon Johnson, who, by the way, his father was an executive at GM. This should automatically disqualify him. He should not be analyzing Tesla. Let's compare where Tesla and GM are right now in terms of technology and Tesla's lead. Let's start with where GM is at. GM can't make a battery. Let's be honest. I'm a little confused by Dan Ives. Dan Ives says GM is at an inflection point as they drive towards an electric future. I'll go into why this is a joke in a second. Dan Ives says that GM is a disruptive technology play. I mean, this is total nonsense. Look at where the top engineers are going. Number 1 and number 2 swap between SpaceX and Tesla, depending on the day. SpaceX and Tesla are the top of the top destination for the best engineers. GM and other legacy auto are third tier, that is, the lowest. I'm not speaking ill of their engineers, but let's face facts. If those engineers were offered a job at Tesla, they would hightail it. Dan goes on to say that GM should trade at multiples to the likes of Tesla and other EV pure plays as GM executes on its vision. Now, I don't know what GM's vision is, but I think it has something to do with burning down people's houses. Or maybe their vision has to do with partnering up with Nikola. Oh right, Nikola is being investigated by the DOJ. Or maybe their vision is to partner up with Lordstown Motors. Oh, that's right. They're under investigation too. I admit it looks like GM is at least trying, but their management, CEO in particular, has no clue what she is doing. They are incompetent. Then Dan goes on to leap praise on GM's so-called game-changing battery technology. Oh yeah, about that. Whoops! GM warns some Bolt EV owners don't park them inside or charge them unattended overnight. Where do most EV owners charge the cars again? Oh, that's right, at home. Who actually wants to charge their cars at a station? I mean, really. One of the biggest conveniences of owning an electric vehicle is the ability to charge at home. And GM is saying, don't charge their cars in your home because your GM car might burn it down. Oh man, you cannot make this stuff up. You cannot make this stuff up. These cars were made between 2017 and 2019. GM already thought they found the issue and did a recall. And then these recalled cars caught fire after the recall so-called fix. Well, I guess their fix didn't work. This is too embarrassing, so let's move on to Tesla. Now, let's look where Tesla is at. This clip is from the Dirty Tesla YouTube channel. Check them out. Their content is amazing. This clip is of a segment that has 0 interventions on FSD Beta 9.0. Granted, FSD is nowhere near complete. There are still glaring issues, but Tesla is far ahead of everybody else. Make sure to click the notification bell to see when I drop the auto and energy models. You'll not want to miss those. Also, comment down below if you'd like me to do a DCF model on FSD. Don't forget to like and subscribe, and comment down below what is your price target for Tesla in 2031. And remember, this is for FSD and Robotaxi only. This does not include auto, energy, or any other business. I mean, we're headed for astronomical numbers. Wall Street just does not get it. And I will be releasing my models for energy and auto soon. And don't forget to go to my Patreon. It has all of my spreadsheets, past and present. And guess what? The spreadsheets have all the calculations built in. All you have to do is plug in the numbers and to see what valuation works for you. And guess what? For the next 100 patrons, it is only $1. Thank you to my subscribers. Thank you to my patrons. You guys are amazing. Thank you so much. You are what keep this channel going. Thank you, and I'll see you in the next one.